their payables or their accounts receivable. They're certainly not tracking their balance sheet. And that's a key thing in any business, but especially startups, because at some point you're going to want to know how much your business is worth because you're trying to bring on investors, or maybe you're trying to get a line of credit, those kinds of things. And those are balance sheet questions. Those aren't P&L questions.
All right, this is another episode of the Form Your Impact podcast. Today we have a little bit of a change. We have a conversation with Jeremy Wells, and Jeremy Wells' company is JWellsCFO. How you doing, Jeremy?
I am doing well, Michael. How are you?
Things are great. As you know, we typically talk to founders and investors in scalable ventures, and we wanted to talk to Jeremy about his company, but as well as how he works with founders. So I guess for people that don't know, who is Jeremy Wells?
Well, first of all, thanks so much for having me on the show. It's a great pleasure. I've watched several of the episodes, gotten caught up, and huge fan and glad to be here. Love what you're doing. So, I am Jeremy Wells. I am a CPA, certified public accountant. I'm also an enrolled agent, which is a special license from the IRS to deal with tax matters. So, that should tell you I'm an accountant, but I'm a little bit more than that. I'm also a fractional CFO. So, I am helping businesses think beyond just the taxes and the bookkeeping, but into the bigger financial picture for the business as well as for the owners. So I run a virtual accounting firm called JWellsCFO that provides the typical accounting services that you would think of for agencies and their owners: taxes, books, payroll. We do some accounts receivable, accounts payable, making sure cash flow is doing all those things. But then I personally function as a fractional CFO for another set of clients. Some of those accounting clients are also CFO clients. I have some CFO clients that we don't do all that work for. We work with the founders and the accountants to help make sure their finances are on the right track.
That is amazing. It's such an important area, but it's not always a fun area. If you had only one piece of advice for founders, what would that
Yeah.
advice be?
Yeah. So especially thinking in terms of, startups, is don't wait on getting your not just financial but also legal, all of that, like you said, not fun, sort of administrative and financial stuff. I mean, it's easy and quick to get sales and marketing up, to get operations and fulfillment, and of course you got to do that sort of stuff because, to a founder, to an owner, that is the business, right? But you need all of the protections and long-term thinking and strategizing that's going to come out of your admin and finance operations. So it might seem like a luxury at first, and something that you can put off until you've proven the concept, until there's enough profit there to be able to afford it. But the later you wait, the more difficult and the more expensive it gets to backtrack and put all of that scaffolding, all of that infrastructure in place to have the accounting system, to have the payment system, to have the financial advisory system, and especially the legal system, have all that in place. So get your attorney, get your CFO, get your tax advisor, get those people in place as soon as possible.
That is great advice. And what does it look like when someone becomes a client of yours? Like, what's the typical stage that they're coming in at, and what's the
Yeah.
process to, getting to that point?
Well, the reason I'm saying that advice is because typically they're coming to me a little bit later in the process, right? They floundered a little bit. Maybe they've already registered an LLC, but sometimes it's not in the right state. So they're even though there's a lot of information out there about which state you should register your LLC in for the most protections or the best tax benefits. Really, the rules are actually a lot simpler than what's out there. You just need to register where you're active, and usually founders are just active in the state that they're actually living in, and so that's a pretty common misconception. That is one of the first things we have to correct, and that means oftentimes I'm referring prospects to an attorney first, actually, because they've got legal things that we need to clean up before we can start diving into the accounting stuff. And so we want to make sure, like I said, that the legal and the accounting are all set, and then we want to make sure that there's a good accounting system in place. So a lot of founders, a lot of startups, a lot of early stage owners are coming to me, and they've been running out of spreadsheets, or maybe they set up their sales platform in something like Stripe or Square, and they're collecting payments, but that's really it. They're not tracking their expenses, they're not tracking their payables or their accounts receivable. They're certainly not tracking their balance sheet, and that's a key thing in any business, but especially startups, because at some point you're going to want to know how much your business is worth because you're trying to bring on investors, or maybe you're trying to get a line of credit, those kinds of things. And those are balance sheet questions. Those aren't P&L questions, right? So you can't. It's a lot harder to cobble together a balance sheet based on your last 12 months of bank statements than it is a P&L, right? And so those are things that you want the systems in place as early as possible to be able to do that. So a lot of the founders and owners that are coming to me is when they've hit that point to where they're trying to apply for a mortgage, or they're trying to apply for a line of credit for the business, or they're trying to bring on their first partner or investor, right? And at that point, they want to get that deal done as quickly as possible, but maybe they've already been in operation for a year, 18 months, 24 months at that point. And so we've got a year or two of bookkeeping to catch up on. We've got a year or two of tax returns to catch up on. We've got a year or two of financial analysis to go back and do. And that is work that should have been done during all that time. And now we're trying to compress that into a matter of a week, maybe 2 weeks. And we're going to miss some things, right? We're going to make some errors. We're going to make some hasty judgments. But if we would have put that information and the ability to put that information together in earlier, we could have made maybe a little bit better judgments, maybe thought more about the valuation of the business when it comes to bringing that partner on or that investor on, maybe made a better case for a bigger line of credit, right, than the terms that your bank was willing to offer you, or maybe even a lower interest rate, right? So there are all these downstream effects that come from putting these systems in place. And so you've got to look at it as an investment, not an expense or a luxury.
Geez, it helps if my volume's on. That's great advice, and it's helpful if people start early. So that is always helpful
That's right.
for someone and not kind of catch up after 2 years. Uh,
Yeah.
what has the role of partnerships and community been in your success so far?
Yeah, that's a great question. And so, like is obvious from this so far, I'm in the accounting space and in the fractional CFO space. So obviously, there's working with my customers and clients and trying to help them, grow and expand their businesses. And I learn a ton from them. I learn as much from them, if not more, than they learn from me about finances. But I have a lot to learn from other experts and colleagues in my industry and field. So I came into accounting from a bit of a non-traditional background. I didn't start off in accounting. This is actually my second career, but I was lucky to find a mentor online through social media. I was searching around for somebody that I could lean on when I decided to transition into this career, and I talked with a lot of local people. I also talked with a lot of people online, and it turns out that somebody that I met over a Twitter DM turned out to
Wow.
be my mentor. Yeah, and so you never know, right? You never know where the next person is that you're going to meet that's going to change your life and change the life of your family and your kids and so on. And so, I was lucky to meet that person. But I run a virtual accounting firm, right? So it's already a bit isolating. And I don't have a big office. I don't have a staff. I don't have a lot of people that I'm interacting with daily. And COVID exacerbated that, right? And so over the last couple of years, a lot of accountants, and accounting is typically a conservative field, right? The mindset in the field is typically pretty conservative, maybe even a little backward at sometimes. But COVID really helped overcome that for a lot of accountants. And one of the responses to that period was to start reaching out online more to our colleagues and start forming both formal and informal communities. And so if you're a Twitter user, there's a hashtag tax Twitter, right? And it's a lot of tax professionals interacting with each other. Yeah, exactly. There's several formal online communities that I'm in with, and now that we're starting to see some return to pre-COVID sort of normal life, some of those online communities are actually turning into in-person meetups, and so that's been pretty fun. People that you've only met and known through social media and Zoom calls, maybe. Now we're actually meeting up in real life. So community has been huge. It's really been what's helped me work through things and keep a positive attitude throughout COVID, when it could have been really isolating and almost depressing at times, right? Just feeling stuck and alone. But it's really helped overcome that.
That is terrific. Well, we want to make sure that we invite you to be a part of our community. As you probably know, we launched something this year called Intros, and it's automated introductions between founders and investors. We should add a CFO in there. So, Jeremy, if you want to join us, it'd be great. It's
Awesome.
basically introductions to your inbox each week. So, who is the best type of person to get in touch with you, and how do they do that?
Yeah, so like I said, you can find me on Twitter. I'm at JWellsCFO. That's probably where I'm most active as far as social media goes, and then also JWellsCFO.com. But you can also find me on LinkedIn, Facebook, all those places, all at JWellsCFO.
Terrific. We will include those in the show notes. So the final thing is, as you know, when we have interesting people on the podcast, we like you to nominate other interesting people who are founders or investors, typically in scalable startups, either raising or have raised or are an established entrepreneur. Who would you, Jeremy, like to see us talk to in the future that you can introduce us to?
Yeah, I am a huge fan of Nathan Barry, the founder of ConvertKit, one of what I think is one of the best email services out there. So, and I'm a big fan of having your email list and staying in touch with that list. And his product ConvertKit makes that really easy for a lot of people and a lot of the founders and owners that I work with that are they haven't taken that step of starting up their marketing machine, starting up their email list. That's where I point them to. I point them to ConvertKit. It makes it so easy. So I'd love to see Nathan Barry. He's got a lot of great content beyond just emailing, though. A lot of great content as far as building wealth, and so a lot of good information for founders and business owners there from Nathan.
That is amazing. Nathan, you have been nominated as a future guest. We will make sure we reach out to you. Thank you so much, Jeremy. I really appreciate having you on and look forward to following your journey.
Thank you, Michael.